Are you an international investor looking to diversify your portfolio with one of the world's most stable property markets? Every year, billions of pounds flow into UK real estate from overseas investors, and there's a very good reason why. In the next 5 minutes, I'll show you exactly why the UK property market is a magnet for foreign investment and what returns you can realistically expect, the complete roadmap to get started, including the costs, legal requirements, and potential pitfalls you need to know about. Let's dive in. The numbers speak for themselves. In 2024, overseas investors purchased over £8 billion worth of London property alone, representing nearly 15% of all transactions in prime central London. But why is the UK such a compelling destination? First, you're investing in one of the world's most stable economies with a legal system that's been refined over centuries. The UK offers transparent property laws, strong tenant rights that actually protect landlords too, and a regulatory framework you can rely on. Second, demographics are on your side. The UK's population is projected to grow by 4 million people over the next decade, with London alone needing an additional 66,000 homes annually to meet demand. A limited supply, combined with growing demand, equals opportunity. Third, the UK offers something many markets don't: true liquidity. You can buy and sell properties relatively quickly compared to many international markets, and there's always a deep pool of both buyers and tenants. So what can you realistically expect in terms of returns? Buy-to-let yields across the UK typically range from 4% to 8% annually, depending on location and property type. Northern cities like Manchester and Liverpool often deliver higher yields, sometimes 6 to 8%, while London properties typically yield 3 to 5%, but offer stronger capital appreciation potential. Over the past 20 years, UK property has delivered average annual returns of 8 to 10% when combining rental yield and capital growth. Even during economic downturns, UK property has historically proven resilient, with London recovering from the 2008 financial crisis within just 4 years. The buy-to-let market is particularly attractive due to consistently high rental demand. With home ownership becoming increasingly difficult for many UK residents, the rental market continues to grow, providing steady income streams for investors. Now, investing from overseas can seem daunting, but with the right approach and support, it becomes much more straightforward. The key is working with reputable UK companies that specialise in supporting international investors. These firms handle the entire process from start to finish, beginning with deal sourcing, using their local market knowledge to identify properties with the best potential returns before they hit the general market. They arrange and conduct property viewings on your behalf, providing detailed video tours and comprehensive market analysis. When you're ready to move forward, they handle price negotiations, leveraging their relationships with estate agents and developers to secure the best possible deals. They'll also guide you through selecting the right conveyancing solicitor and connect you with reputable property management companies who will handle everything from tenant finding to maintenance. Essentially, they become your eyes, ears, and hands on the ground, making international property investment as straightforward as a domestic purchase. Let's be realistic about both sides of this opportunity. The advantages are strong: solid legal protections, stable rental demand, potential for both income and capital growth, and access to one of the world's most liquid property markets. The UK also offers excellent financing options, with many lenders offering mortgages to overseas investors. However, there are challenges to consider. UK property requires active management, whether you do it yourself or hire professionals. There are also ongoing costs, including maintenance, insurance, and property management fees that can impact your net returns. Currency fluctuations can work for or against you, depending on the performance of your home currency against the pound. recent tax changes have made buy-to-let less attractive than it once was, although it remains a viable investment strategy. Speaking of taxes, let's cover the key financial obligations you'll face. As a foreign investor, you'll pay an additional 5% stamp duty on top of standard rates. For a £300,000 property, that's an extra £26,000. You'll also face capital gains tax when you sell, though this can be minimised with proper planning. Don't forget about sourcing fees, legal costs, surveys and other transaction expenses that typically add 3 to 5% to your purchase price. Legally, you must comply with anti-money laundering regulations, which means providing comprehensive documentation about your identity, income sources, and intended use of the property. This includes bank statements, proof of income, and sometimes additional verification depending on your country of residence. Your solicitor will guide you through these requirements, but preparation is key. Have your documentation ready before you start viewing properties. The UK property market offers real opportunities for international investors who approach it with the right knowledge and support. While there are costs and complexities involved, the combination of stable returns, strong legal protections, and growing rental demand makes it an attractive addition to a diversified portfolio. If you're serious about exploring UK property investment, we're here to help. At Vaso Invest, our team understands the unique challenges facing overseas investors and can guide you through every step of the process, from initial market analysis to property management. You can find our contact information in the description below or visit our website to schedule a consultation. Don't let distance stop you from accessing one of the world's most stable property markets. Thank you for watching. If this video was helpful, please subscribe for more international investment insights. I'll see you in the next one.